The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money, money, money's coming to me. Money sets me free. I'm a money magnet. Money, 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 money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
Or actually a very cheap imitation thereof. Good afternoon to you, coast to coast, border to border, here on the Off the Wall Street Radio Network. Craig Roberts sitting in for the vacationing Phil Grande. Been working hard. Got to give the man a little bit of a break here. So we dispatched him off to yonder parts to get some relaxation today. And so we'll be with you for the program this afternoon, talking about money, what's going on in the world of politics. Of course, as we lead off the day today, Wall Street not very happy. First debate out the gate between Hillary Clinton and Donald Trump. Today so far, Wall Street numbers down all across the board. The Dow down 162 points, the NASDAQ down 46, the S&P down just 18. And of course, a lot of this indicative of this lackluster market that we've been experiencing for so ever long. And of course, it's got investors a bit worried about what's going to transpire tonight in the debates. This is the first chance for Donald Trump and Hillary Clinton to face off. And of course, this primary focus by Wall Street this week on how the debates come out, because it's key, it's pivotal because of the policies and positions of these two presidential candidates. Now, Clinton's once comfortable lead in the opinion polls has evaporated with just over 6 weeks until Election Day. Some investors see it as a toss-up contest, creating volatility in certain sectors, including health insurers, drug makers, and industrials. Now, let's kind of work through what that means. Well, number one, the market seems to be a bit favoring the known entity of Hillary Clinton as opposed to the unknown commodity of Donald Trump. Now, a Clinton presidency, though, has broadly negative indicators for pharmaceutical companies. She, of course, has been very critical about so-called high drug prices and frequently said during the primary that she would fight pharmaceutical companies as part of an attempt to counter criticism that she was too closely tied to the insurance industry. Trump's disapproval of free trade agreements, of course, suggests that industrial companies and other major exporters might suffer should he become president. So, of course, all eyes will be on the debate tonight in New York City. Big questions, of course, that perhaps will come out during the course of conversation tonight, including the direction of the country economically, what's going on with Fed policy, how long the Fed can continue to monetize the economy by holding down rates as low as it has since 2009. And we've seen yet once again a second quarter decision by the Fed chair just last week to leave everything alone. It's been that way since the fall of last year. What does all of this mean long term for the economic health and stability of our nation? We've invited Joyce Cordy to join us on the program. Joyce offers depth and insight on government dysfunction based on her 30 years of hands-on experience managing business transformation activities. She, by the way, was instrumental in the post-merger integration at HP Compaq and developed some cost-effective Sarbanes-Oxley controls at Cisco. She's got decades of experience in the world of money and corporate management. And Joyce, great to have you join us on the program.
It's my pleasure.
Let's talk a bit first about as these two candidates take center stage tonight in the first of a series of debates. Do you concur that there are some reasons that Wall Street has good cause to pay very close attention to the outcome of this debate tonight?
I think we all do. It's a pivotal moment for the country, let alone the markets. We are in an economy, we're an economic Neverland. I mean, there is no movement forward or backward at the moment. As an investor myself, I'm nervous.
And I think with just cause, I mean, we've seen some degrees of volatility or concerns over some of these high drops and lows we've seen, 300-400 point intraday trading sessions that makes the markets a bit nervous. But overall, there's been practically no volume whatsoever, and the only thing that seems to be shoring up corporate America right now has been stock buybacks. How long do you think that can really, practically speaking, last?
Well, as we know, the banks are running out of capital, so it can't last much longer.
There is a new report out by the Pew Research Center that's also tying in the stagnation of Wall Street to the stagnation of the overall economy and the economic health ultimately of middle-class America. I found it a bit shocking to see that while over the course of a period of time between 1964 and 2014, the average worker's wages jumped 700%, when you factor inflation in over the course of that 50-year period, real wages grew by less than 8%. And I would imagine at the end of the day, Joyce, this is just no way for middle America to maintain any kind of standard of living.
They can't. Do you know what the poverty rate in this country is for a family of four? There is a headline just today in the New York Times that says 3.5 million people were lifted out of poverty. That means they have an income for a family of four that exceeds $24,300. Let me tell you, here in California, you couldn't rent a tent for that.
That's very true in many parts of the nation. And, of course, along with that has been concerns about the decline in America's quality of education. One of the broad areas that really has impacted middle-income earners has been tuition costs. They have jumped over that same period of time, Joyce, between 1978 and 2008 of 1,120%. I guess there's no wonder why we see some of these corporations saying the only way that they're going to keep their doors open is if they bring in people working on the HB1 visas.
Well, I think bringing people in on H-1B visas is a short-term fix and a long-term problem. But that's beside the point, because eventually, as those people come into the U.S. economy, they have the same issues as the rest of us, where we're in Silicon Valley, a family with $100,000 a year income is barely getting by. So the H-1 visa issue, unless you're bringing only single males living four to an apartment, is a very short-sighted way to fix the problem. And let's talk about why tuition's gotten so high. Well, the more access. I mean, it's a supply and demand issue. The more people have been told you got to go to college, you have to have a 4-year college degree, etc., the more demand there's been with a restricted supply, so the more expensive it becomes. The more accessible student loans have been, the more colleges have felt, oh, gee, we can raise rates because people, can borrow the money to pay the tuition that allows us to enlarge our administrative staff and lavish great benefits on our faculty. The University of California gives subsidized mortgages. It subsidizes an electric car if you're at the associate level, etc. All of that paid for by the kids who are struggling to get into the right classes to get out of college in 4 years.
And, of course, the irony is that we're leaving college after 4 years with a degree that can't give us an entry into a job because the jobs are paying ridiculously low rates. And even if you are fortunate enough to be able to find the employment, you're not going to be able to earn high enough of a salary to put food on your table, let alone think about paying back those college loans. And it becomes this vicious cycle. And this is some of the fundamental reasons why the economy is floundering the way it has been. Yes, we seem to have staved off the worst of creating a recession that would have been equal to the Great Depression of 1929, but it's simply been a matter of kicking the can down the road all these years. And therein lies, I think, the big frustration for investors right now, and that is, I buy money on Wall Street as I am buying through my broker or what have you, and yet there's no returns there because there's absolutely zero volume. We'll talk more about that as this edition of philsgang.com continues.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
Hi, I'm Phil Grande at philsgang.com. You know, most people get involved with a 401k because of the employer match. They really believe that there's free money. There's no free money. It's a scam. Here's how it works. You ever notice that you can't get the money all at once? Why not? Why don't they just give you the match all at once? Why over 6 years? Because they know only 12% of the people who work for a company stay for 6 years or more. Only 12% are there for 6 years. That's why they plugged it to 6 years. They know you're not going to stay. So it's not for your benefit. It's for the benefit of the company. It's a scam. There's an alternative, though. Phil's Gang. Join my gang. philsgang.com. philsgang.com.
Find out more at philsgang.com, philsgang.com, or call 877-600-4264, 877-600-4264, 877-600-4264, 877-600-4264.
Hi, I'm Phil Grande at philsgang.com. You hear me talk about 401ks every day on my radio show. Why? Because it's such a disservice. 89 million Americans have a 401k. There's 638,000 plans. And the father of the 401k, Ted Brenner, even admitted they're a scam. He doesn't endorse them anymore because of the ridiculous fees. You got to get away from those fees. Remember, every 1% fee, they take 30% of your retirement money. The average fund is 2.5%. 60% of the money is going to be gone when you're ready to retire. You don't need to do that. There's an alternative. Join my gang, philsgang.com. philsgang.com. Seek out the alternative. Give yourself a break. philsgang.com. Sign up today.
Find out more at philsgang.com, philsgang.com, or call 877-600-4264, 877-600-4264, 877-600-4264.
Hi, I'm Phil Grande at philsgang.com. We're a teaching format, and boy, do we give good service. You know, buying a stock doesn't have to be complicated. The reason why Wall Street makes it complicated is so to make you think you need to hire them. You can do better without them, believe me, because you're not going to have those big fees. Come to Phil's Gang, where we'll show you an easy way to buy a stock. philsgang.com, where we don't make it complicated but profitable.
For more information, go to philsgang.com or give us a call. That's 877-600-4264.
Hi, I'm Phil Grande at philsgang.com. You hear me talk about 401ks every day on my radio show. Why? Because it's such a disservice. 89 million Americans have a 401k. There's 638,000 plans. And the father of the 401k, Ted Brenner, even admitted they're a scam. He doesn't endorse them anymore because of the ridiculous fees. You got to get away from those fees. Remember, every 1% fee, they take 30% of your retirement money. The average fund is 2.5%. 60% of the money is going to be gone when you're ready to retire. You don't need to do that. There's an alternative. Join my gang, philsgang.com. philsgang.com. Seek out the alternative. Give yourself a break. philsgang.com. Sign up today.
Find out more at philsgang.com, philsgang.com, or call 877-600-4264, 877-600-4264, 877-600-4264.
As a mother, you don't want to have to worry about this bill is coming, but then she needs this chemo. That's a decision you shouldn't have to make.
At St. Jude, a family never sees a bill at all. It's like the world has been lifted off of your shoulders.
The treatment doesn't get any better than what you receive at St. Jude. It saved my life. It saved my daughter's life. It saved our family.
St. Jude Children's Research Hospital. Finding cures. Saving children. Learn more at stjude.org.
Do you invest in a 401k or an IRA? Did you know you could lose 30, 40, even 50% of your investments when the market crashes? It's time you take control of your investments. For over 15 years, philsgang.com's Phil Grande has been teaching, coaching, and investing right along with all Phil's Gang members, making profits when the market is up or down. philsgang.com posts daily market updates, has a live investing class, and all material is archived. Sounds too good to be true? Why not join thousands of satisfied Phil's Gang customers today? Go to philsgang.com, philsgang.com, or call 877-600-GANG. That's 877-600-4264. 877-600-4264.
For more information, simply go to philsgang.com or call 877-600-GANG. That's 877-600-4264.
philsgang.com.
Welcome back. This segment of the Phil's Gang Show is brought to you by the MV Stock Charts. For more information, go to philsgang.com.
And welcome back to this edition of Phil's Gang. Craig Roberts in for the vacationing Phil Grande. Joining us on the program today is Joyce Cordy. Joyce is with reimagineamerica.org. That's reimagineamerica.org. And Joyce, just before the break, we were talking about some of the economic challenges that have been facing not just corporate America, but middle America as well. Everything from stagnant wage growth to growing income inequality. On the corporate side of things, we are seeing virtually no trading volume whatsoever. And a lot of the Wall Street fat cats seem to be shored up simply by these major stock buybacks that are beginning to dwindle. And I have to wonder, in relationship to tonight's debate and the next leader sitting at 1600 Pennsylvania Avenue, how much is the economic tone set by the policies of the president? And is the winner in this election going to ultimately still be the loser, given the economic morass in which the next president will step into?
I think so, which is why I'm so troubled by this election. It's not just that we have the two most dishonest people ever to be nominated in this country as the primary, as the likely choices, but it's also that neither of them, and I actually went to their websites last night to confirm that I'm telling you the truth, neither of them has a plan to address our growing national debt. Hillary Clinton wants to raise taxes, but she wants to use that money to create new entitlements. Entitlement spending is already 67% of the U.S. budget, and it's growing every year. And, you know, we're within 6 years of Social Security being bankrupt, probably a little less than that, because last year they had to borrow money from the general fund to pay Social Security checks. And so when you talk about this recovery, in which seniors are getting no interest on what meager savings they have, and young people are entering the workforce with debt or no skills, and in either case getting low wages, there is no way without making changes to stabilize our social safety net.
How much of this is directly accountable to the Fed? And I ask that question, Joyce, because obviously there have been talk even last year about, well, there's likely going to be one, maybe two rate increases in 2016. The Fed passed on the second opportunity just a week ago. Now there's a little bit more talk about, well, maybe in December, but it seems as if they've literally tied their own hands behind their backs. And looking at the current rate of our U.S. debt as it heads towards $20 trillion, we'll be there very shortly, can the Fed even afford to raise rates? At what point can the United States Treasury no longer meet its obligations? I mean, $19 trillion debt when you've got 25 basis points in interest is no big deal, but if they start to get up to some reasonable interest rates numbers pre-2009, it would seem to me that it's just a complete formula for disaster.
It is a formula for disaster. It's a formula for disaster either way. It's a formula for disaster if they raise rates, because that means that there is more general fund money going to pay, more of your tax dollars are going to pay the interest on the existing debt, which makes the rate of borrowing higher unless we stop spending some money. And if we don't raise interest rates, if we continue down the path we're going on, in about 4 years, our debt to GDP ratio will be 100%. And if I were the Bank of China or the Bank of Saudi Arabia, I wouldn't lend us money.
We're headed toward pre-World War II numbers then, in relationship to what's happening with our indebtedness to GDP. And
Correct.
We've made the comment before, this is the first president since Roosevelt, and Roosevelt, of course, walked into a real economic mess following the Wall Street crash of 1929, that this is the first president since Roosevelt that we've not seen at least 1 year during a presidency with 3% or higher GDP.
Well, you know what GDP is based on. You know, we're now going to talk about something you and I both know a lot about, which is the difference between the money supply and the quantity of money. It is not, you know, the quantity of money is a number of bills you have in your hand. The velocity of money is what makes your economy grow, and that's the speed at which those dollar bills change hands within this economy. Well, this economy is 80% consumption and 20% production.
And we're seeing some of the lowest savings rates that we've seen in 50 years.
Well, of course, because when you have an 80% consumption economy, those dollars are flowing to Asia or Europe or Africa, where those goods that we're consuming are made. They're going out of our economy. So the only part that remains in our economy is the retail sale price and the clerk who's handling it. So there's no growth in productivity.
From your perspective, Joyce, and you bring a lot from the corporate America viewpoint on this.
And I've done a little work for the government, too, and shaken a few things up.
So in terms of the ability of the Fed to kick the can down the road, they've proven themselves to be enormously adept at doing that over these past many years. But I've got to believe there's going to become a point of which they're going to kick that can, slip, and fall. How soon might that happen?
I'm not Cassandra, but it cannot be far off. Just looking at post-World War II economic cycles, I'm with Larry Summers that we are in a stagnant period at this point, and it's not likely to continue at this rate forever. It can be the wrong candidate winning the election and shaking up the market. As we noted from the papers today, there are some capital risks within some of the big banks. There are any number of issues, and unfortunately, the Fed has used up all of its tricks.
Yeah, that's the big problem, of course. Every quill is gone from the quiver, as they say. Joyce Cordy with reimagineamerica.org. That's reimagineamerica.org. Appreciate the time, Joyce. We're going to take a brief time out here ourselves. When we come back, we'll talk more about some of the primary reasons why the middle class is in serious trouble, and what do you as an investor do to make money when there's no volume? As Phil's Gang continues.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG. Phil Grande is a career businessman who has also been an entrepreneur all his life. He has used his business skills to take companies on the abyss of bankruptcy and bringing them back to profitability. Phil has been honored by Inc. magazine for the 500 fastest growing privately held companies and has been recognized with a prestigious Entrepreneur of the Year award. From the real estate to gas and oil industries to the stock market, Phil Grande has mastered his line of business from start to finish. And with a passion and desire to make you a profitable investor, only Phil teaches you and guides you to make informed, unemotional investment decisions. And you'll gain the knowledge of what Wall Street doesn't want you to know. If you want to learn from the best and strengthen your ability to invest, then turn to Phil Grande and philsgang.com. Simply call Phil's Gang at 877-600-GANG. That's 877-600-4264. Or go to philsgang.com.
Hi, I'm Phil Grande, philsgang.com. It's always about fees. That's right. It's always about fees. When you're investing in anything, it's about fees, but especially 401ks. Let me explain to you how you get screwed with a 401k. Nobody will tell you this. You'll be told with a $25,000 investment, your 401k will return 7%, and over 30 years, you'll retire with a nest egg of $226,000 with a fee of 0.5%. That is a lie. Do you know if you just bump it from 0.5% to 1.5%, that $226,000 drops to $160? With 2% fee, it drops to $123. But you know what most fees are? 3%. So you're going to drop almost below $100,000. Join my gang, philsgang.com, and get rid of that 401k. It is not for your benefit.
Isn't it time you reduce your fear of investing? Find out more at philsgang.com, philsgang.com, or call 877-600-4264, 877-600-4264, 877-600-4264. Phil Grande is a career businessman who has also been an entrepreneur all his life. He has used his business skills to take companies on the abyss of bankruptcy and bringing them back to profitability. Phil has been honored by Inc. magazine for the 500 fastest growing privately held companies and has been recognized with the prestigious Entrepreneur of the Year award. From the real estate to gas and oil industries to the stock market, Phil Grande has mastered his line of business from start to finish. And with a passion and desire to make you a profitable investor, only Phil teaches you and guides you to make informed, unemotional investment decisions. And you'll gain the knowledge of what Wall Street doesn't want you to know. If you want to learn from the best and strengthen your ability to invest, then turn to Phil Grande and philsgang.com. Simply call Phil's Gang at 877-600-GANG. That's 877-600-4264. Or go to philsgang.com.
Hi, I'm Phil Grande at philsgang.com. You know, there's nothing worse than you're investing in a stock and during the day something happens and you don't know what to do. You don't know who to call. Or you call somebody and they just give you a bunch of BS. Not here at Phil's Gang. We value every gang member. During the day, you got a question about your stock, you contact us. We have the best service in the world. philsgang.com. You're not alone. You're a gang member.
For more information, go to philsgang.com or give us a call. That's 877-600-4264.
As a mother, you don't want to have to worry about this bill is coming, but then she needs this chemo. That's a decision you shouldn't have to make.
El que San Jude no cobra ni un centavo para nosotros significa quitarnos todo ese estrés, esa preocupación y podernos enfocar en nuestra hija.
That was the first thing I was like, how are we going to do this? When St. Jude told us that we didn't have to pay a single bill, I was like, wow. They pretty much have saved us.
It's like the world has been lifted off of your shoulders, and now your focus is supporting this child.
There is not another hospital like St. Jude. The patient care is unmatchable. It saved my life. It saved my daughter's life. It saved our family.
Hi, I'm Phil Grande at philsgang.com. You know, people make it too complicated. Wall Street tells you the market cap and the trailing PE and the forward PE and price to sales to confuse you. All you need to know is, does the stock have volume? What's that mean? Energy. What does that mean? If you have people buying a stock, enough of the stock's being bought, it influences the prices to go up. Join my gang, philsgang.com. We're using charting, philsgang.com.
For more information, go to philsgang.com or give us a call. That's 877-600-4264. Welcome back. Are you a fan of the Phil's Gang radio show? Then you should check out philsgang.com or give them a call, 877-600-4264.
And welcome back to Phil's Gang. Craig Roberts in for the vacationing Phil Grande. We've been talking about the debates tonight. And, of course, as we'll hear from both of the candidates, they are wont to tell stories. Politicians are very good at telling stories. One of the problems, though, is as they weave their stories, it oftentimes becomes a major departure from reality. When you talk about the economy, you can't base it on stories. You have to base it on ground-level facts. And the numbers tell a story that, quite frankly, is very troubling. One of the big concerns, of course, as we mentioned with Joyce Cordy just a moment ago, is the whole question of where does the Fed go from here? Realize it's been almost 8 years since the Federal Reserve began the unconventional policy known as so-called quantitative easing, translation printing money in the basement, with the goals of stemming financial panic and restarting economic growth. And while some of those efforts at stemming financial panic might have succeeded, the one major arena, so that means everybody didn't run for the banks. Okay, that's encouraging. But the one major arena where it has been a dismal failure has been restarting economic growth. We spoke to the fact just before the break that this is the first administration since Roosevelt in the early 1930s to not see at least 1 year break 3% or higher GDP. When you couple that with the troubling announcement, and I say it's troubling because I think at the core it is, that the Fed announced just last week, second quarter in a row, it will pass up the opportunity to raise interest rates, further kicking the can down the road. There's talk now about, well, maybe Janet Yellen will come back and do something in December. But the problem here is that we've seen the Fed enter into a very unconventional policy of free money. And how do you wean people off of free money? The reality is you can't. And perhaps it's high time that even the United States consider depending less on our so-called Federal Reserve or our central bank that, quite frankly, has no connection to the federal government in the first place. It's no more federal than FedEx is federal. The Fed's consensus forecast, looking ahead to the next 2 years, are you ready for this? Predicting a mere 2% annually in growth, and a lot of this, of course, due in large part to stubbornly low productivity. Part of that, of course, I think has been a malaise amongst consumers to aggressively spend because they're concerned about tomorrow, because they're concerned about wage stagnation, and of course they're concerned about high levels of inflation hitting in just certain areas that the Fed doesn't normally like to talk about. That includes such things as housing and food. If we couple together stagnant wage growth, high levels of debt, not only for the federal government, but did you know that the average American household has 122% of income to debt ratio? Now, we can celebrate the fact that that's down from 140% in 2010, but that's nearly double the burden of American debt that families are carrying since 1989. Couple that with the Fed's monetary policy, which since December of 2008 has been this, well, we don't need to charge for money business. And although some middle-class families have benefited from low mortgage rates, the overall effect, though, on America's so-called economic backbone has been disastrous. What do I mean by that? Low yields on bank CDs, savings accounts, checking accounts, U.S. Treasury bonds, all at all-time lows. And the problem with this, of course, is that this nominal growth rate that underperforms relative to inflation means that not only are we seeing reduced purchasing power, but people who count on that as income, largely retirees or those approaching retirement, are left in the cold. Couple that with poor savings habits, as we mentioned a moment ago, and the growing income inequality, it suggests that not only is this recession that we've experienced since 2008, 2009 going to linger, but in fact it could get much worse real soon. Now, what does much worse look like? Well, let's talk for a minute about healthcare costs. We saw the announcement by Aetna just a scant few weeks ago that they're going to pull out of a number of exchanges across the country. In fact, they were in a total of 15. They're going to be out of 11 of the original 15 comes January of 2017. Plus, many of the so-called nonprofit exchanges are bailing as well. In fact, latest news is that Health Republic Insurance of New Jersey, they're going to close doors. They'll force 35,000 recipients of health care through Obamacare to find a new plan coming 2017. Aetna, as we mentioned, has ditched 70% of Obamacare business so far, and many of these large insurance companies are simply saying, we cannot afford to continue to participate in this scheme. United Health Group, the nation's largest insurer, recently ended most of its Obamacare exchanges for similar reasons. Wage stagflation, inflation when it comes to healthcare, typically running at double digits. They're even predicting that by the time the final information is out concerning your premiums, that'll be just a week before the election. We're going to see anywhere between 9% to 15% increases in premiums across the board. And that's not just for the Obamacare participants, that's for all of us. You couple all of those factors together with the lack of volatility on Wall Street and corporate America running out of tricks in its bag, you can only buy back so much stock for so long to demonstrate that there's any money there. And the price-earnings ratios have been so far off the charts in Neverland, as we discussed earlier, that means ultimately America is going to be facing a serious correction. And I think once everything plays out, as there are no more weapons in the arsenal of the Fed in terms of policy decisions that it can make, the only thing that the next administration can do is engage in some serious belt-tightening. And Americans, I think, overall is going to need to rethink not only their spending habits and their saving habits, but also rethink many of their investing habits. And we'll talk a bit after the break more about the corporate America and this huge stock buyback binge that'll be coming to an end quite shortly here. A lot of the stimulus that we've seen literally since 2008 has been between free money or cheap money and stock buybacks. But there's no real value there to corporate America. And without any volume trading, investors on Wall Street can't make any money. And certainly people that are looking at the hardcore numbers in relationship to what's going on with treasuries, what's happening with mutual funds, what's happening with some of the more secure, quote-unquote, safe havens like bonds, if you're barely meeting the pace of inflation, you're losing earning power, which means you're losing savings power every single day. Then what happens? You reach retirement, and you suddenly realize that there's a major gap between your income and your expenditures. And it isn't like it was 50 years ago when the average retiree retired with no debt. The house was paid off. There was no mortgage to worry about. You could afford health care. There weren't concerns about runaway inflation. So you basically retired with a pension fund and Social Security, and that was all you needed to live out your years. Now Americans are living longer, and of course the cost to live is becoming more and more expensive, especially for those of us on either of the two coasts. San Francisco Bay Area, the median price of a home in San Francisco is $1.2 million. That means the average San Franciscan has to have gross income of $142,000 per year just to buy a median-priced home. How long do you think we can keep the game up? How long do you think Wall Street and the Fed can continue to shore up the economy? We're going to zero in on this, and most importantly, some options. What do you have available to you as a resource to be able to make sure you don't get slapped back hard once the next round of recession hits? And believe me, when it hits, it's going to hit hard. More as Phil's Gang continues.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
Do you invest in a 401k or an IRA? Did you know you could lose 30, 40, even 50% of your investments when the market crashes? It's time you take control of your investments. For over 15 years, philsgang.com's Phil Grande has been teaching, coaching, and investing right along with all Phil's Gang members, making profits when the market is up or down. philsgang.com posts daily market updates, has a live investing class, and all material is archived. Sounds too good to be true? Why not join thousands of satisfied Phil's Gang customers today? Go to philsgang.com, philsgang.com, or call 877-600-GANG. That's 877-600-4264. 877-600-4264.
For more information, simply go to philsgang.com or call 877-600-GANG. That's 877-600-4264.
philsgang.com.
Hi, I'm Phil Grande at philsgang.com. We're a teaching format, and boy, do we give good service. You know, buying a stock doesn't have to be complicated. The reason why Wall Street makes it complicated, so to make you think you need to hire them. You can do better without them, believe me, because you're not going to have those big fees. Come to Phil's Gang, where we'll show you an easy way to buy a stock. philsgang.com, where we don't make it complicated, but profitable.
For more information, go to philsgang.com or give us a call. That's 877-600-4264.
Hi, I'm Phil Grande at philsgang.com. You hear me talk about 401ks every day on my radio show. Why? Because it's such a disservice. 89 million Americans have a 401k. There's 638,000 plans. And the father of the 401k, Ted Brenner, even admitted they're a scam. He doesn't endorse them anymore because of the ridiculous fees. You got to get away from those fees. Remember, every 1% fee, they take 30% of your retirement money. The average fund is 2.5%. 60% of the money is going to be gone when you're ready to retire. You don't need to do that. There's an alternative. Join my gang, philsgang.com. philsgang.com. Seek out the alternative. Give yourself a break. philsgang.com. Sign up today.
Find out more at philsgang.com, philsgang.com, or call 877-600-4264, 877-600-4264, 877-600-4264.
As a mother, you don't want to have to worry about this bill is coming, but then she needs this chemo. That's a decision you shouldn't have to make.
At St. Jude, a family never sees a bill at all. It's like the world has been lifted off of your shoulders.
The treatment doesn't get any better than what you receive at St. Jude. It saved my life. It saved my daughter's life. It saved our family.
St. Jude Children's Research Hospital. Finding cures. Saving children. Learn more at stjude.org.
Do you invest in a 401k or an IRA? Did you know you could lose 30, 40, even 50% of your investments when the market crashes? It's time you take control of your investments. For over 15 years, philsgang.com's Phil Grande has been teaching, coaching, and investing right along with all Phil's Gang members, making profits when the market is up or down. philsgang.com posts daily market updates, has a live investing class, and all material is archived. Sounds too good to be true? Why not join thousands of satisfied Phil's Gang customers today? Go to philsgang.com, philsgang.com, or call 877-600-GANG. That's 877-600-4264, 877-600-4264.
For more information, simply go to philsgang.com or call 877-600-GANG. That's 877-600-4264.
philsgang.com.
Welcome back. Looking for insights and investing information? Join Phil Grande and become a Phil's Gang member today. For more information, go to philsgang.com.
And welcome back to Phil's Gang here on the Off the Wall Street Radio Network. This is Craig Roberts in for the vacationing Phil Grande. You got to give him a break once in a while, you know, kind of rest the fingers for a bit. And of course, he'll be back in full force this coming Monday. Meanwhile, we've been talking on today's edition of Phil's Gang about the economy, the debates tonight, the economic sleight of hand that's been used by the Fed over the last many years to shore up the economy, to kick the proverbial can down the road. There will be, as we've discussed, a significant day of reckoning, because you can only have these price-earnings ratios so far out of whack for so long. You can only engage in stock buyback programs for so long, and eventually it all dries up. The Fed's latest backdown in deciding not to raise the overnight lending rate last week, I think further not only undermines its credibility, but there's this talk about, well, maybe in December, and you heard Janet Yellen even articulating that they're going to give that some serious consideration. But here's the problem. Many investors are now, I think, raising a credible question as to whether or not the U.S. Central Bank can even raise the rates come December. The big, of course, concern here is the growing distrust of not only the central bank and the Fed's management of the current economic situation, but here's the other concern, and that is investors worry about the ultra-easy monetary policies that have caused these debt levels to surge. Are you ready for this? Do you know what the level of indebtedness is? We talked earlier about indebtedness in the average American family, and that we're spending 125% of our income. But here's the other staggering number. Right now, U.S. corporate debt is approximately $7.9 trillion. That's up from $2 trillion during the time of the financial crisis back in 2008, 2009. And all of this is because corporate earnings have not kept up with its debt buildup. Corporate sector has suffered 5 consecutive quarters of earnings declines. And of course, the failure of the Fed's policies to generate a robust economy means that it's simply a matter of delaying the inevitable day of reckoning. And I think it has a lot of investors, and justifiably so, concerned that companies don't have the capacity to service the huge mountain of debt that's been amassed. Again, corporate debt, almost $8 trillion. That's up against the federal debt, which is twice that amount, more than $19 trillion. And new reports are coming in, even by some of the international bankers, that saying there's a good chance we're going to be heading into a pretty serious recession again. The problem with this recession over the last one is there's nothing left in the Fed's arsenal to stave off the economy completely going off the rails. Some of the factors that are raising this recession risk include debt growth, as we just mentioned. That's up 5.5% year over year. Struggling domestic products. And if there's any kind of tightening in lending standards come next year, we're going to enter into a recession. That's essentially 2 consecutive quarters of year-on-year economic contraction. We're in a manufacturing recession stateside already. And fueling the rising market has simply been corporate stock buybacks. There is no volume right now. And this stock buying binge will no doubt soon be coming to an end as corporations run out of money. They can only get themselves so far in debt as well. According to one report, domestic mutual funds have lost more than $26 billion in assets over just the last 4 weeks, the largest outflows since 2011, by the way. Now, to be fair, this reflects a change not only of opinions at the margin, since investors are still holding nearly the largest allocation of stocks as a percentage of total financial assets in some 50 years. And equity assets compared to safe money market assets, while down from recent highs, are still at levels above where they were in 2000, 2007. But that is such a precarious position that any major event on the geopolitical landscape, let alone economics, could completely topple the whole kit and caboodle. And therein, I think, lies the big concern for many people, and that is, all right, if I can't make money on Wall Street, and I can't afford to buy real estate, certainly not on either of the coasts for the most practical standpoint, and some of the more traditional safe havens are not even keeping pace with inflation, meaning U.S. Treasuries, bonds, things of this sort. All right, what are your options? If you go to your investment advisor and say, can you do something for me? Do what? more and more, I think Americans are beginning to realize that you need to be better diversified. And typically this sense of diversification has been in a very narrow-minded fashion, focused on things like, well, I'm going to buy some mutual funds, so I'm diversified there, or I've got some money in real estate, I've got a little money in Wall Street and equities, I've got some money in mutual funds, I've got some money in bonds, things of this nature. So there is my diversification. But there's a couple of important parts of this equation that you're failing to recognize. Number one, people say, well, when the markets start to go haywire, it's best to be in some of the old-fashioned investment vehicles, get involved in things like gold and silver. Well, quite frankly, the only people that make money in gold are those who sell it for a living. And even if everything comes completely off the rails, what are you going to do? Accept gold bullion and then just carve off, shave off a little bit of it when you go to the grocery store? That's not going to work very well. And when you look at the expenses of even the average mutual fund, or how much money your stockbroker is enjoying in commissions and fees, against the inflationary numbers and the lackluster performance numbers that we've been experiencing for a couple of years now, doesn't leave you with many solid, serious options, except taking matters into your own hands. And toward that end, I want you to be mindful that there are resources available to you out there where you can get an education on how to trade in the market for yourself. You know what the best part of that is? You're not paying huge commissions to some nameless broker sitting up on the 54th floor of some building in downtown Manhattan. You're not losing tons of value in the high prices that you have to pay when you're getting in and out of commodities like gold and silver. And it puts the control into your own hands. People say, well, Craig, here's the problem. I don't have time to get engaged in investing on Wall Street. I don't have resources available to me to do any of that. I can't be sitting here and watching what's going on day to day. Well, and that's the reason why Phil's Gang is such a wonderful resource for you, because Phil's Gang can provide you with stock market investment education, and in doing so, teach you how to trade by watching the trends. One of the things that Phil Grande is so brilliant at is this sense of pattern recognition. There is an ability to be able to watch trends going on Wall Street through charting, where you can get ahead of some of the dark pool money. Have you heard of that? Where there's basically block trading going on. Many of this is going on at the institutional level, and well beyond the access of the average investor out there. But you can spot trends going on within the candlesticks, within charting, to tell you when the big money is about to move in or move out. Wouldn't you love to have Warren Buffett send you an email and say, I'm about to sell this or about to buy this, and be able to follow on his coattails? Largely, charting allows you to do just that by recognizing the patterns that are indicative of where the market is heading next, and then be able to respond to them. And that's exactly the kind of education that philsgang.com provides. Phil Grande can teach you how to watch the patterns, and of course he's got daily classes available on the internet. He also provides, by the way, some wonderful access to software that helps take all the guesswork out of all of this. It's a way for you to learn how to become completely independent so that you can take back control of your own economic future and not watch all your profits going to some Wall Street fat cat. Want to find out more? Go to philsgang.com. That's philsgang.com, or you can call them toll free at 877-600-GANG. That's 877-600-4264. Get more information. Get educated. As we head into this coming recession, the more you know gives you the ability to be protected against the coming economic downturn. philsgang.com or 877-600-GANG. Till next time, have a great afternoon, and we'll see you on the charts.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.